Do you ever think there is a missing chip that you need to know about in your trading career which you keep searching for, and until you find that, your financial journey is not complete? Have you ever thought that in this market that you can consistently make profits, and profits that you'll be making while sleeping? Well, in the forex market, all these are possible. But the number one thing you need to make it in this space is knowledge. If you have a doctorate degree, if you have a BSc, if you have a master's degree, please keep that aside, because the knowledge of forex starts from nothing. You just have to keep all those qualifications aside and begin again and see what you can get from this market, because you really need to know what is happening in this space before you even begin to engage the market using your real money. Please, none of all this is a financial advice. We are only here to tell you what we see in the market and also advise you and see how you can begin to put these things into practice, at least using simulated funds. So by the time you actually tune or hone in your skills, you will be able to begin to make good money for yourself. So today in this video, if you stick around with us, you are going to see how we analyze the market using these strategies that we promise to bring to you, and that is number one, the Elliott Wave strategy, and then the other one is the Gann strategy. Now these strategies are complicated, but I'm going to try and simplify them, and that is why I'm not going to put you all in the class as if I'm teaching you. I'm just going to look in the charts, get setups, do chart analysis on the setups using the same strategies that I have mentioned now, so that along the way I will be making reference to where Elliott Wave applies and what you need to look out for, and then make decision, and also Gann, where it applies and how you need to take it and use it and to your own advantage. So stick to the end of this video, keep watching, and you shall see how we attempt to simplify some of the most complex things that are being taught in these strategies. So I'm going to start by showing you some things about Gann itself. I have something to show you here, and that is let me see. I'm looking for the screenshot that I took. I want to show you something. It's not a screenshot. Okay, here it is. Here. Look at this chart, for example. This chart, for example, you can see what you are seeing on your screen is a 100 years chart of gold. Can you imagine that? Very, very old chart. It is 100 years old, and it is showing us what has been happening within these 100 years. That is a century, right? So this is what you are looking at, and I decided to uh imbibe the habit of going to see what is happening, what has been happening for a very long time, so that you can have a wider view, a wider picture of what you are trading, no matter what instrument it is, be it gold, dollar, or what have you. So I decided to go on to this very nice website that I came across. I will drop it in the link below, so you can start try to go on your own and see what is happening there. So but I decided to imbibe the habit of going to check on these things to see the wider picture, and then use my Elliott Wave basics to analyze what is happening, and then use my Gann also to know where I am in a particular point, at a particular point, and then I will begin to now think of now coming to tune in, or let me say continue to drop down to lower time frames until I find a good setups to enter. Now let me take it one at a time. I'm going to start by telling you about a little thing about Elliott wave theory. Elliott wave theory is actually something that was born by a very, very sound trader back in the 1870s. He died in 1948, but these things that he actually worked on are still working on up to this day. And he actually taught us to look at the charts in form of waves, that charts print patterns, and these patterns are translating what? They translate the mood swings that happen among what? People, among traders back in even those days. So it is something that keeps happening because who are trading the markets is people. So it is the people are trading the markets, and the mood swings are what we are seeing in form of the charts, and they are printing uh these charts for us, and they are printing before our eyes. And that is why if we see it going up we say buy, if we see it coming down we say sell. So but if you look at it now, Elliott is saying that for a complete cycle of uh price action, that you will have five waves, that a complete cycle has what is made up of five waves, 1 to 5, wave 1, 2, 3, 4, 5. And these waves are divided into two types. You have the motive waves and you have the corrective waves. The motive waves are the ones that move along with the trend, and the corrective waves, even from the name, implies the ones that move against the trend. Like I told you, I've always said that price doesn't move forever up or in one direction. It has to take a breath. It has to cool off a bit. And that is where you have what you call the retracements. So that is what Elliott is saying, that if you have wave 1, 3 and 5 of the cycle, they are all trending waves. They are trending waves. They move along with the trend. If the trend is bullish or is going up, then these waves 1, 3 and 5 will move along with the trend, and wave 2 and 4 they move against the trend. So if you are looking for a position and you want to buy something in the market and you're looking at any chart at all, uh if you want to apply the knowledge of Elliott wave to identify where you are in the market, you will see that you should not enter when wave 2 is active or wave 4. You need to enter at wave 1, 3 or 5. That is if for a buy setup. But for a sell setup, then the same thing applies, but you have to turn everything upside down. But for now, let us look at what is happening in a buy setup. What you are looking at, like I said earlier, is a 100 years historical chart of gold. And if you look at it, Elliott, after saying that each chart is made up of what? 5 waves, he also gave us some golden rules. I'm going to talk about those golden rules. Please get a pen and paper and just scribble it down as I say it, so that if you want to count anything on your charts, you should bear those rules at the back of your mind. Before I go far, if you're just joining us, this is Forex Mom, and this is our new channel that we intend to come and every day do chart analysis on using the Elliott wave and Gann concepts, and then see if there are entries. Let us understand the larger picture and try to use multi-time frame analysis to also tune down to smaller time frames or lower time frames if you wish, so that we can have entries and we can make informed decisions. Now, as I was saying, we already have 5 waves, and these lines you are seeing, you can see the first one comes down. Okay, look at it. I'm going to the far left. Look at it. The first one comes down, then goes up, comes down, then goes up even higher, then comes down, then goes up again. These are what you call the waves. Even if you open any forex chart, be it on MetaTrader 4, or is it on CTrader, or is it on any web kind of app that you're using to trade, you still see what? Charts. These charts can be in form of lines, or in form of candlesticks, or in form of what? The native open, high, low, close kind of candles, what do you call it, price action. So, but for now, all that doesn't matter. All I want you to know is to try and identify what you are seeing on your screen and agree that you are seeing waves, waves that move up and down. Now, according to Elliott, he said that even though a circle is made up of five what? Five waves, 1 to 5, that wave two must not retrace more than 100% of wave one in a clean progression. If you want if you want to know that you are in a perfect setup using your Elliott theory, if you identify your wave one, supposing the wave one here is the one that goes up after the one at the extreme end here, the one that goes up. For example, if you identify this to be, let me see, can I use something? Let me see. I want to try and see if I can actually use something to touch or show you what I'm referring to, because I downloaded this from that website and it does not allow me. It's not like an active chat. So I don't know what I will use to show you what I'm referring to. But I'm referring to here, for example, this wave is coming down, but for example, if you're going up and you take this one to be from this length to this length to be your wave one, and you have your wave two, which is corrective, it is coming down. Like I said, wave two is corrective. So wave two should not go lower than wave one. Look at it now. If you look at this chart now, you will find out that your wave two, which is this wave that is coming down here, it has actually gone beyond the starting point of wave one. This violates Elliott wave theory. So if you are counting, you see something like this. If you have your one and you see two has already gone beyond the level of one, then you should know that it's invalid, and then you should look for another point again to start what? Counting from. Now, having said that, that is the number one golden rule. It says wave two should not retrace more than 100% of wave one. It means it can come 38.2%, 50%, 61.8% Fibonacci levels, but it shouldn't go up to 100%, talk less of beyond that of wave one length. So since we already have that in our mind, the second golden rule now says wave three should never be the shortest wave. Wave three should never be the shortest wave. There could be some waves that may be longer than wave three in the progression, but wave three is certainly never the shortest wave. Bear this at the back of your mind, is very key. Then the third rule says wave four should not trade into the region of what? Wave one. It shouldn't travel up to the region of wave one. It means, like I said before, if you remember what I said the Elliott wave progression is made up of 5 waves, 1 to 5. Wave one, 3, and 5 are what? Trending waves. And then you have wave 2 and 4 going counter trend, which is like in form of retracement. They are taking a break. So that wave 4, before wave 4 should not travel into the region of wave 1. So I will show you that clearly when we have an active chart on my MetaTrader 4, but I'm just trying to show you and teach you maybe something very basic about Elliott wave theory. Now, look at it from here. Since we said this wave 1 has violated, if you look at the second bottom here, look at the second bottom here. I'm taking it to be my wave 1. If I say wave 1, I go up. If I come down, that's wave 2. Okay? Look at wave 2. Did it pass 100% of my wave 1? No, you can see it stops around 70.5 level. I know you may not understand this because I didn't place a Fibonacci to this, but because I've been using it all the time, this looks like a 70.5 level. Don't worry, just understand the basic concepts. As we move gradually, you will understand how to use your Fibonacci tool to gauge these moves and see the extent it has reached, to even see if it has violated any of the Elliott wave principles. Now, because it hasn't retraced more than 100% of wave 1, I take it that it is a valid wave 2. Then I move again. From that wave 2, I move up. You can see this, the last leg moving up is considered to be my wave 3, and there is a golden rule that says wave 3 must never be the shortest wave. So because of that, I have seen that it is almost at the level of the top of wave 2. So it means that there could be more what? More move coming. And don't forget that we are talking about 100 years old chart here. Now that we know that we are in the third leg, which is in the wave 3, even in a 100 years old chart, wherever we are, if we're looking at gold, we should be looking at it from this angle. We should be at the back of our mind that whatever structure we are looking at is only part of this wave 3 that we are seeing from this 100 years old historical chart. Now let's close this and go back to our MetaTrader 4 so that we'll be able to see from a chart of gold what it looks like. Let me try to open it from another place like this. Let's see, let's look for gold. Look at gold here. Let's open the chart of gold. Now look at gold. This is a daily chart of gold. I want you to learn how to count the waves, the Elliott waves from anywhere. You see, like I said before, you already know that we are in wave 3 from that larger picture. That's just my method. Another trader will just come and go to the monthly and then start their chart. They are charting from there. You can start now from the monthly. Since we already know that we are in wave 3, it means everything that we are seeing here is all part of wave 3. But within each wave, again, please bear in mind, within each wave there are waves, and there are waves, and there are waves. So whatever you are looking at, even up to the 1 second chart, you still have other waves within, which we consider to be subwaves. So look at it now from here. If you look at this chart of gold, zooming out, you see that. Let's try to count what we are seeing. Now from here, you can see from this level here, if you say this is 1, 2, okay, 3, 4, 5. You could count it that way. But if you look at it, I said wave 3 should never be the shortest wave. And if you say this is only 3, wave 3 here, you can see how short wave 3 is. So this counting is not valid. It should be longer than this. Because look at wave 1 here. Look at wave 1 is good. Wave 2. Wave 3 should be like this, all of it. From there up to here should be what? Wave 3. So even on the monthly, we are seeing that we are already in wave 3, but we can still take it from another angle. If you even look at it, just close here. Just close, maybe ignore this other part and look at it from here. If you look at it from here, you will still see something like what you are seeing. And like I told you before, even within a wave, there are what? Subwaves. So you can see, if you take this to be your 1, look at it, 1, 2, 3, 4, okay? Look at it, it's the 5th leg that we're having right now within a subwave. These are the subwaves that we are seeing on monthly, okay? So this is a 5th leg we are seeing from the way that I have counted it, okay? Look at it, 1, 2, 3, 4, 5. So we already have a 5th leg pulling, which is like the last leg in a complete cycle. And after this, there will be a pullback, and that pullback will be what? Will give us ABC pattern that will now reposition itself to continue in the upward direction. So for now, we already know on the monthly we are seeing a wave 5 in action. Let's go to weekly and see what it will show us. Now you can see on the weekly, what you are seeing on the weekly is what? You can see what? Look at it. If you say this is wave 1, 2, 3, 4, okay? Or you can start from here. You can start from here. Look at it. Let me show you better. Look at it. If you say this is wave 1, 2, okay? Let me make it here. Look at it. Look at where it V'd here. That V button you are seeing. If you say this is 1, 2, this is 3, 4, this is 5. Okay? This 3 perfectly fits. Look at it. Always notice how long your 3 is. Look at it. We said this is the bottom. We begin 1, 2. Look at 3 up to here, 4. Then look at 5 here. Then there is the retracement. After every cycle is complete, you have what you call the ABC pattern. I will draw it for you in another paper and try to explain to you so you can see what I actually am trying to explain. Now look at it. Because wave 5 ended here, the next thing you see is an ABC pattern, and this ABC pattern is doing nothing but trying to balance again and to continue giving you more structures in the buy position, since we already saw that gold is going up even from the 100 years historical chart. So what we are seeing here right now is that what? Look at it. This is the end of wave 5, and then there is a retracement. This retracement down here is what you call A. This green candle is B, and then there is another C that comes back down, and that C bottoms, and that is where you should take an entry trying to follow the trend to continue in the buy direction. Look at it. If you had caught it here, opened a buy position at C here, and then look at it, it continues giving you the first leg, which is wave 1. So on the weekly, we are looking at a wave 1 in action. We don't know, this pullback we're experiencing could be that wave 1 is even over, wave 2 is trying to set in. But you never can tell until you see perfectly what is going on. If this retracement gives an ABC pattern, then you consider it to be your wave 2. But for now, what we are seeing here is the first leg is already obvious on the weekly chart. But on the monthly, what did you see? You saw a fifth leg. Like I said, price is fractal. Whatever you are seeing on one chart can be taken to another chart and you will see it in a what? A higher or lower degree. The same exact thing happening but at a lower degree. So right now what you are seeing on gold is the fifth leg happening on monthly, but dropping down to the weekly, what you are seeing is that the weekly chart of wave 1, in the weekly price action of wave 1 to 5 is even complete, and we already have a C. We already have a C has formed here, ABC has formed here, and it's already moving up in the direction of the uptrend, trying to post a new leg, which is wave 1. Wave 1 has already, as far as I'm concerned, this is wave 1, because like I said, another trader will come and count in a different way. But if you make mistake, you will see it in the result of your trading that you are actually losing. But if you try and get it right, then you see that even if you're trading, you can trade and sleep because you believe that Elliott Wave got you covered, and then Gann, I will come to Gann, but right now we are trying to see where we are buying gold. So I started buying gold right from here, building a small account right from I think $6. Right now we are at $12, and I continue to build it with this principle at the back of my mind. So right now on weekly is a 1, wave 1 is active, but we suspect that wave 2 has already started to form. So this is why I have a bullish bias on gold, and I'll continue to look for only buy setups until maybe another cycle is complete. But don't forget, as price is traveling, sometimes you see all this like this ABC pattern forming here, and you believe that using another concept you see that maybe you hit a breaker or something, and then it's causing this kind of things to happen. But with Elliott waves, you already expect to see such thing happen, and so you'll be expectant that okay, at this form, at this point, I will be expecting to see such to happen, and then lo and behold, it begins to happen before your eyes. So that's how beautiful Elliott wave theory is. Can we go to the daily time frame and also see if we can count something? Look at it. Look at it. If you take this to be your wave 1, 1, 2, 3, 4, 5, you can see a C is also forming here. A C is forming here because after your fifth one, okay, after your fifth leg, you can see this consolidation is forming something like what? A, B, C, and then we begin to move back up. So if you don't understand what I'm saying, do not worry. You can go and jump on any material you can lay your hands on and study how the Elliott wave patterns are printed on your chart. Try to envisage what you saw here on whatever material that you are studying on, so that you'll be able to relate them. And then on the real chart is where you learn, because most of them use only what? The drawings to show you how the patterns are. But for you to now bring that knowledge you have acquired to the charts is something on its own, and that's why I'm hell bent on bringing them directly to the charts so that you understand what we are saying. And then it's even better to see it this way than see it only in the form of drawings, and by the time you bring it to price action, confusion will begin from there. So if you are calm, you will get to understand how to count. Somebody may be saying, why didn't I stop? Okay, look at it. I said 1, 2, 3. Why didn't I stop here and take this as my 3? If you look at it, the rule says 3 should not be the shortest chart, and that's why I'm extending it to here. And if I should take what? There is something I didn't even tell you about these waves. Wave 1, 3, and 5 being the trending waves, these have each within them, they have another set of 5 waves again. But wave 2 and 4, they do not have waves 1 to 5 within them, they only have A, B, C. Okay, so you can see because they are all about retracements, you can only find ABC within waves 2 and 4. But waves 1, 3, and 5, you can find smaller waves, what? 1 to 5 among them. You will understand what we are saying gradually, or by the time we begin to show you more on these Elliott waves. Look at it. This we are seeing on daily. If you go to 4-hour again, you will see a lower degree pattern. You will see a lower degree pattern which is already on course. Look at it. If you look at wave 4 on this chart, if you look at it, you can see that it is 1. If you consider this to be 1, 2, 3, 4, 5. Okay, if this is 5, that means one cycle has completed here already. Just look at it, that one cycle has completed here, and it did A, B, C, and starts again. Now it starts again. It starts posting another leg. You can say this is 1, 2, 3, 4. Okay, 4, 5. Look at 5. Look at 5 from here out to this top here is still 5, and now we are waiting for ABC to continue forming or finish forming so that we can continue moving in the direction of the uptrend. Whenever you know this, then you will find that Whenever you see the 5 has already finished for me, you don't even wait for it, you just allow it to keep doing its thing until C has formed, so that you come and take it again and take an entry at the bottom. Because I'm learning how the pullbacks happen, I am studying these things closely, and I'm always here to see how deeply each retracements go, because when you talk about ABC, then they are retracements, and I want to see how deeply they go, so that I will know where to expect to take my entry, so that we can be able to travel in the direction of the trend all the time and not against it. Having said that, you know that we are forming bias. We have seen where we are trading gold, and we have been trading gold like where I showed you on the weekly, where I took it from the bottom of that leg and I've been trading down since then. Let's use a red line to demarcate that bottom, so that even when we drop to what is a lower time frame, we will continue to see to understand what these things are, to see that what this is what you are seeing on the weekly. Look at it. We drop to the daily, and that same red line is there, but look at how the chart has widened, because there are how many days in a week? There are 5 days in a week. And so look at it, how many days are here? Look at it here, how many weeks are here? So if you go to the daily, you expect to see even more candles, and that's what exactly you are seeing here. Look at it, W has perfectly formed. So it is already in motion, but we have to wait for this C to complete, so that we can continue buying it and going up in the direction of the uptrend. Now, having said that, the another thing that backs this decision to continue in this bullish direction is the Gann time cycles. Gann time cycles from January 15th up to January 30th, I mean from December 15th to January 30th, I think that is about 45 days. And a new trend has set in. That is what we have been trading from that 15th of December up to, sorry, is it 15th? Yeah, 15th of December? 15th of December, or is it January? Uh, okay, it was the 45 days started from somewhere in December up to 15th of January, and we've been trading it right from 15th of January up to the end of January. That is why another 45 days I will come with this calculation in the next video, but we have been trading within a particular Gann window of what? 45 days. Each 45 days he says we should watch out for something. Something will happen in each 45 days. So we start looking for that sign 3 days to the completion of the 45 days. And like now, like I said, January 30th is something that we have been looking at. It means we would start looking for something to happen on that chart right from around the 27th of January. We've been looking to see, is this a bullish move? What is forming on our chart? Like for gold now, let's see. This is the daily chart, and today is, I think, is it 29th of January. So you can see since yesterday or day before yesterday, this was posted, and yesterday this candle again came and posted itself like this, and I'm seeing something now that we have a swing low here. Now this swing low, will it hold? If it holds by tomorrow, it means we are just going to continue moving up. We are going to have a bullish 45 days next. But if something happens and this price is broken up to the bottom here, maybe price now travels to the bottom here, then it means we would have a bearish 45 days to come in future. So that is how I manage to form my bias. Gann supports me, I will know that okay, since this is the first 40, I'm within a Gann window right now, and I've seen the formation on my chart suggests that we are moving either bullish or bearish, then I will use my Gann again to see which cycle are we, which wave is actually active. I will not go and buy in wave 2 or wave 4. I will only try and buy in wave 1 or wave 3. Wave 3 is the most active of them. And wave 5 can actually travel to almost the same length as wave 3 or wave 1. Sometimes you will find a sluggish wave 3, it means wave 5 will actually be what? An explosive move, a very trendy move. And sometimes you find wave 5 is actually sluggish, like it's kind of choppy, like not very smooth, then it means wave 3 had already done the job by being so very powerfully trendy. So this is how these things alternate. There are some things that I will just have to be showing you as we continue in the course of these videos, but I've been using this, like I said, to build up a small account that I almost lost hope in, because I was trying to use it using another, trade that same account using another strategy which required also a trend. Without a trend, that strategy cannot be used, and that is the strategy I'm teaching on the other channel. If you cannot understand, if you don't understand what we are saying here, please go back to our Humble Traders channel and watch the videos there where we teach the SEWA strategy. And the SEWA strategy, like I said, uses the trend. If you go counter trend, then you continue to lose your money. But I now decided to bring this channel so that I will bring more of my strategies instead of teaching everything in one channel, and which may end up what? Causing more confusion to our viewers. I want to stick to something, and I want to stick to the way I do things, like in this channel should differ from the way I do it on the other channel. But as time goes on, when our viewers understand what we are saying, sometimes you see them what? Inter interrelating with one another. You will see them what? You will see one strategy is overlapping with another strategy, and then the picture becomes clearer. If you like what you are seeing already on this channel, this being our first real video for the channel, if you understand what we are saying or it resonates with you and you like it, please, you can drop us a like. You can just like our videos. Just recommend it to friends to view, just like you have done. And then that's all. We keep bringing you more content. You can even suggest any pairs that you would like to see us analyze using this same Elliott Wave strategy and Gann. I will just mention that this is where we are in a particular time cycle, and I've just said that today marks the beginning, or is it tomorrow 30th marks the beginning of another 45 days, which we'll expect to see what happens on our chart using only the time cycle, because there are so many parts to Gann. We have Gann square of 9, you have Gann time cycles, you have also Gann square, and you have Gann lunar calendar, lunar dates. So all these are ways of trading, different ways of trading Gann. But I chose to use the time cycles because that one is what will enable me to understand or use it with other to support use it to support other strategies, and then it's easier for me to engage the markets like that. There is a way we can use this same Gann strategy to forecast where we expect the next low to happen. And then I've just done that, even though it's a mixture of Michael Jenkins. Michael Jenkins also uses a lot of Gann in his analysis. And then when I used the same strategy to forecast where we expect to see the next low to happen, I saw on USD JPY that prediction is already currently happening. So these strategies are powerful. If you are watching us, please take this seriously and make it a date with us anytime anytime if you subscribe to the channel, hit that notification button and make sure it is set to all, so that anytime we drop a content, you will be able to get that notification and then come and build upon what you know using this same simple English that we are using and simple method that we are actually using. I don't know if I can be able to draw this the waves for you so that you can understand. Let me see if I can get a notepad. Let me see if I can actually get a notepad and then try to uh, draw it. Let me see if I can try to draw something for you, the way these Gann waves are actually happening. Or what you do, I used to have one notepad that I can easily draw anything. I can actually draw. It's telling me to choose a picture, and that's not what I want. uh anyway, I will look for a notepad that will allow me sorry for that abrupt ending to that video. I will I was saying I will look for another notepad that will enable me actually show you how to draw these Elliott waves or how to understand the Elliott waves better. I used to have one that allows me to do freehand sketching. I can't find it, but I will look for it, and then in the next video I will try and use the freehand to actually sketch it for you so you can understand. Now let us look at what the news cost. This FOMC news uh, has actually caused dollar to be strongly bullish, and you can see after dollar has been caught in what we call a wave 4 of the Elliott wave, and it has actually been forming and falling for like a long time, and then this news has actually impacted it positively. As we can see, look at it. Let's try. This is USD JPY. Let us try to count the waves that we are seeing on this chart. Look at it. Look at it. Look at it from here. If you say this is 1, 2, this is 3. This whole long one is 3 as it is now on the weekly. Then look at that consolidation. That is where 4 began to happen, and you can see it has been caught up in this choppy movement. And since then we have not been able to comfortably buy dollar, because dollar, as you are buying, it turns bearish again, even though we can see that it's coming in contact with some breakers. But due to the strategy we are using, which is the Elliott wave and the Gann strategy, we know we have a bullish bias. Every counter move is just a what? A retracement. And so as it is now, we have been waiting for price to break up to the highest level of this consolidation, which is around 161.778, to allow wave 5 to take its course. But usually in the Elliott wave list of uh, waves progression, you find that uh, uh, wave 4 is usually complex. If you go to even if you go to the monthly time frame, you still see this consolidation. It is still around wave 4. Even here, there was a time I opened the trading view, and then I opened the 6 months chart, and I still saw what? I still saw this particular choppiness. Now, there is something I want to show you. Like I showed you the chart of gold, the 100 years old chart of gold. Let me show you that of the dollar. The dollar, I also have that of the dollar. I think somewhere here. I think this is that of the dollar. Look at what it is showing us. Did you notice that same choppiness? But this is not, I think this is not for 100 years. I think it is for 30 years old historical chart. Look at that same consolidation is there. But if you look at it now on this wider view, which wave are you seeing? Which wave are you now seeing? Look at it. You will see that we have 1, 2, 3. On the larger view, we all know that we are in wave 3, but within the wave 3, we know that we can have other waves, and that is why we are seeing this consolidation around wave what? Wave 4, which is, look at it, as it is now, it is a long wave 3. You can see as it is now, 1, 2, 3. Okay, look at it, it's still wave 3. We can even say wave 4 has begun here, because you can see this choppiness doesn't really look like wave 3. So if we even on the larger view, we know that it is actually bullish, but because of this long-term nature of the consolidation that we are going through, by the time we have that breakout, we are really going to see a formidable kind of move. It is going to be really all explosive. As you can see, this is about 30 years chart. I told you I saw the same thing on a 6-month chart, and I also saw the same thing on a 3-month chart, and then down to a month chart, and then even 4 hourly is still showing us the same thing. So with that in mind, you can see, with that in mind, we know that we are in wave 4 in our dollar, and being a complex wave, we just have to wait for all this dilly-dallying to continue to finish. As it is now, it could still come back and give us another kind of negative trade, because that wave 4 is still in action. You look at it, look at it. Look at it, it is actually supposed to already form a low here by now, and then that low is not visible. Look at it, that low, look at what is happening. That low has taken out another previous higher low here, and is forming another low here already. So let's see, would this low be the one that will now take us back up? We're just going to keep seeing, because we understand that we needed to see another low form. Like I said, I forecasted and I saw that at this position we need to see a new low form, and it is forming already. So we are going to see if this low holds. The next thing is an explosive move to the upside, because we know dollar is very bullish as it is. Okay, so we are just going to keep it. It's a low liquidity kind of account. I would have been in big profit by now, but I prefer to use this type of account so I can get the Elliott and Gann theories working together, the strategies working together, and then we can move to a more liquid account where we can begin to catch huge pips. So if you are with us and this resonates with you, please keep coming back to watch our videos, and if you are able to hit the subscribe button, then don't forget to turn on that notification button so that any content that we upload will reach you almost at once. So you can see a notification telling you that we have actually dropped a new video. So, and you can share this same content with your friends, family. Tell them of this new way of trading that we are trying to teach, which enables us to take a rest. Actually, we do not trade all the time. When we have an entry, we just go and allow price to continue doing its thing. Since you already have a larger time frame kind of narrative, why will you bother yourself? If you are in wave 4, if you want to keep losing money, maybe you can keep just taking this kind of trade. But as it is now, we are seeing that we are at the bottom of that wave 4. That's why we took this trade. If it takes us to profit, fine. And we are working with the higher time frame to see that there is a bottom forming. If this holds up well, then it could be that we are finally going to break that consolidation and move into huge profit. But we are just going to keep that open as we continue to trade and understand how the concepts work. So I will try and come next time with a notepad so I can use my freehand style to design or draw the waves, and then also tell you about the golden rule again, so you can bear it more at the back of your mind. Thank you very much for coming on this channel with us. We thank you for giving us your listening ears. Thank you for listening to us. Until we see in the next one, happy trading.